Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Good morning, good afternoon, good evening, wherever you are. I'm Howard Klein from RK Equity, and I want to thank Minds and Money for joining forces for this kind of lithium and non-lithium battery panels. We have a great list of 6 companies together with my partner Rodney Hooper, which will help us conduct some Q&A with these. I'm going to walk through 5 or 6 slides before introducing the first speakers for the lithium panel. Sorry, here we go, I think. So RK Equity has been in business 20 years. In the last 12, we focus very significantly on lithium battery materials. All of the companies on this panel actually are companies that we do advise. We're not financial advisors or broker dealers, so just always want to disclaim that none of this is financial advice, but we are picking projects and companies which we think are the best and have a very significant likelihood of becoming an important part of the supply of all of these battery materials. So you could look through those credentials and see a number of successes that we've had here in the battery material space. My partner Rodney put together a couple of slides, just battery metals takeaways. It's more about the sales than it is about the cells. And what we mean by that is, on the left-hand side, you see the most popular car in China is, it costs $5,000, but the battery pack size is very small, between 9 and 13 kilowatt hours. On the right, is an American Rivian, which the battery pack is 135 to 180 kilowatt hours. So China has been the lead, and everybody looks at EV sales statistics, but what's going to matter over time for battery materials are the size of the batteries. So Europe is overtaking China to a degree, and with the Biden administration and all of the American companies with very big cars. I'm here actually in Utah, and I'm amazed by how many trucks we see out on the road here, and how excited some of the people I'm talking to are about cars like the Hummer, that GM is coming with. So America is going to significantly increase its demand by having big battery cars and trucks. And that, is reflected by the biggest company in the world in lithium is Albemarle. They have upgraded their demand forecast from about 1 million tons to 1.14 million tons of lithium by 2025. Just a few years ago, they were forecasting only about 600,000 tons. So this is accelerating significantly, but very importantly related to that is that they've also increased their forecast for lithium hydroxide to become 60% of lithium demand by 2025, up from 30% today. So there's been a lot of talk recently about an LFP resurgence, which don't have nickel or cobalt in those batteries, and to some degree that is true and happening. And Volkswagen Power Day indicated that as well. We see that in part because of fears of nickel shortages and cobalt shortages. But if you're talking about Western European demand and Western European supply for Western European demand, which is pretty much where RK Equity focuses, we still very much see a hydroxide-focused, dominated world. Which companies do we think are best placed? As we said, all of the companies on this panel are in North America or Europe. We believe that the companies to succeed are in close proximity to downstream customers with stable transport infrastructure, low-cost producers, low carbon or carbon neutral producers, transparent and stable legal, and financial structures. Elon Musk said mine more nickel. I've added to this graphite, lithium, but also titanium. We have on the second panel here, Piedmont founder Tazo Arima has incubated Tau Commodities, and he's going to talk about the exciting titanium opportunity, and part of the reason I'm here in Utah. But who's next for Tesla? They've partnered with Piedmont, but there's a lot more. When are the OEMs going to get into this game a lot more? When will VW, GM, and Ford follow? VW was conspicuous by its absence during its Power Day, any commentary about upstream raw material supply, but we think that that's likely to happen at some stage soon. I keep track of all the financings across the battery materials. So $4.8 billion has been raised in the lithium markets. Those in green are Piedmont, Critical Elements, European Metals, and E3, a number of those on this panel. And on the right, you could see that of that 4.8 billion, about 2.5 billion, most of it has been in hard rock. Brine has been about 1.5 billion. Most of that was SQM's, financing. Clay, that was largely Lithium Americas Thacker Pass, but DLE brine as a category has increased in attention, and E3 on this panel reflects that. We as a firm are very much advocating for hard rock first. We see huge potential in the DLE brines relative to clays and even conventional brines in South America as offering excellent risk reward. Here's a quick disclaimer. I will end on that and hand it over to one of those DLE opportunities that I mentioned, Chris Doornbus of E3 Metals. So Chris, go ahead.
Yeah, I'm just looking for to get the permission to share the screen.
Yeah, I'm stopping. I stopped my share.
There we go. Thank you. All right. That's up and running there, Howard. Okay. So lithium extraction, lithium production in Alberta, what does that look like? I really like this picture. I think it tells a really good story about what operating a lithium project here locally is going to look like. When you take how we're going to produce the lithium, operationally, how we're going to take the lithium out of the ground, get it to a facility, in a DLE sense, there's no evaporation ponds, there's no open pit mine. This is all a small footprint, closed loop system as we extract the brines from the reservoir, bring them to a facility, extract the lithium out of that brine, and then put that brine back into the aquifer in that closed loop system. This is effectively what we're doing today in Alberta in the same aquifer in a different region where there's oil. This is a picture of an oil facility on the project site. A couple of really key things to note here is how the facility sits in and amongst farmers' fields. The power lines that you see, the grid roads, there's a grid road every mile out here. The skill sets that we're going to require to build this project are almost identical to those in the oil and gas industry. So a lot of comparable projects going on today in Alberta that look just like what we'll end up building here in the next couple of years. And I think it puts E3 a bit ahead of the curve in terms of where we're going in our timeframes. And the reason for that is twofold. We have a world-class aquifer that we've been developing. It's called the Leduc. In 1947, this aquifer was discovered by ExxonMobil, and it started the oil rush in the province. The aquifer has always been rich in lithium brine. They've produced the oil off the top of it, and now what is left is mainly that brine. We've developed a technology that is engineered for purity. It extracts the lithium from the brine directly. That enables us to, again, like I said, have a closed loop system. There's no tailings ponds here. We are simply just extracting the lithium out. We put the brine back down. Because of the way that this system works, it's effectively like a water softener. Because of that and the efficiency, we get a very highly pure, highly concentrated solution. And we're able to turn that solution, what we call the lick solution, into lithium hydroxide, and if we wanted lithium carbonate, directly. The other side of this project is what it looks like in terms of the footprint in this world. And I think this is a very important part of a company such as ours. As we grow towards commercial production, we have to find the capital to build this. And I think a large part of that's going to come from an ESG focused fund. Inherently to the project, like we don't generate tailings, we don't use fresh water, and we only use about 3% of the land. So that's just inherent to how we operate. The other part that E3 is adding on to this is the zero carbon. So we have plentiful natural gas in Alberta. We can use that to generate the electricity that we need, supplemented by wind power, which is we have an 80 meg wind farm on the project site. You combine the two and you generate the electricity you needed, which is 98% of the energy for the project. We have the ability to sequester the carbon coming out of that natural gas exhaust. So it's about 3% CO2. We can take the CO2 out of the exhaust, we can put it into our waste stream and back into the Leduc aquifer, along with our brine stream, a lithium void brine stream. So that allows us to get down to that, near or at zero carbon emissions for this project, which I think is going to be a very important metric by which will be weighed upon when we look to sell the product into the EV market. So two very important metrics here: extremely high purity and low to no carbon emissions from the product. A good summary slide, just to give you guys the full picture so you can look at this. And obviously this will be available, I'm sure. On the left-hand side, you'll see a map outlining the Leduc aquifer. The white outline is our property, so it's our permit boundary. The blue dark shades are our resource areas. You can look at this from the perspective. We've got 7 million tons of lithium under resource at the moment. That's only about 1/3 of the ground that we hold. So the opportunity here is exponential in terms of growth. We also outlined a PEA this year at the starting point of our project, 20,000 tons with a $1.1 billion US NPV. That's pre-tax, 820 million after tax, with a very low operating cost of 3,656 per ton. When you look at that from the perspective of growth, 20,000 is the starting point. We believe we can grow this to over 150,000 tons here in Alberta. So lots of runway for E3 to increase its production as the market grows for the product, as EVs come on market. So path to commercialization, we're looking at pilot plant being built this year, operating likely next year. That'll be followed shortly after with a pre-feasibility study. We're going to start construction about a year after that. So it takes about a year to design the facility, and then about a year to year and a half to construct it. So we're looking at 2024 to 2025 to be in production of the first 20,000 tons on this project. And that's good for me. Thanks, Howard. Appreciate it.
Thanks a lot, Chris. And if you saw on that slide, the market cap of the company is about 150 million. There are, of all the companies we track in lithium, about 4 are DLE public plays. The others are Standard Lithium, Vulcan Energy Resources, and Lake Resources is partnered with Lilac. And on a relative value basis, Chris and E3 own 100% of their project. They own 100% of their technology, and have the lowest market cap, of those 4. So I'd encourage you to check all those out. Next up is Keith Coughlin. He's the MD of European Metals Holdings, which is the largest and most advanced hard rock project in the center of Europe, in the Czech Republic. In 500 kilometers proximity to most of the battery and EV factories that are developing across the continent. We say Europe is the new China, as they have overtaken, I think, China and overall EV penetration. So with that, I'll hand it off to Keith Coughlin.
Thank you very much, Howard. Thank you for having me here this evening, or this morning, your time. If I can just screen share effectively. Okay, just a few slides to summarize. Obviously, this is an abridged version of our normal presentation, but the project, as Howard said, we're in Europe. We're developing the Synovic project. It's by far the largest hard rock lithium resource in the EU. It's important, the distinction between the EU and Europe, simply because the European Union has committed significant resources to the building of a new battery industry, to an electric vehicle future in the region, and more recently to the development of their own critical raw materials. Middle of last year, the EU initiated the European Critical Raw Material Alliance to ensure that it could produce as much battery metal product as possible out of its own resources, no longer wanting to rely on other parts of the world for its supply as much as it possibly can. This slide just gives you a couple of highlights of the project. It is a fully integrated project, so it's not just a mining project. We will go all the way through with our lithium processing plant to producing battery-grade lithium hydroxide. In fact, we have the flexibility to produce either carbonate or hydroxide from the process, and we've produced both of those to battery-grade specifications during our previous test work. The economics of our most recent preliminary feasibility study, which is now about 20 months old, but you can see there on the left a after-tax NPV of about $1.1 billion US, and an after-tax IRR of almost 29%, with the ability to produce battery-grade lithium hydroxide for less than $3,500 US a tonne net of our tin credits. Synovix is a historic tin mine. The first phase of that will see us producing a little over 25,000 tonnes per annum of battery-grade hydroxide. With the right sort of support, financial primarily, we can take that the project into a second phase and potentially produce twice as much end product. Last year, we significantly de-risked the project, primarily through three key partnerships that we entered into. We brought ČEZ, the Czech power utility, into the project just over 12 months ago. They became our project level partners. ČEZ is a publicly listed company in that part of the world with a market capitalization of 12 or 13 million euros, and they're 70% owned by the Czech government. So a very strong partner for us. Through their entry, the project is now fully funded through to our final investment decision, which is expected in about 12 or 13 months' time from now. The second key partnership we entered into last year was with the European Union itself through the EIT, and they are actively involved in helping us access the right groups, the right people within the EU for potential funding, for potential grants, and also for offtake. And then later in the year, we appointed the German engineering firm SMS, very large, very well-respected German engineering firm, as the lead engineer for the definitive feasibility study. We have very, very strong ESG credentials. We are entering a historic underground tin mine, and we've been running our environmental baseline studies for the last 2.5, nearly 3 years now, and we have a very strong view to what our carbon footprint looks like. We'll be conducting formal LCA tests and studies later in the year, but anecdotally, we believe that will come out very well relatively on those measurements. Howard has already mentioned how many EVs are getting sold in Europe these days, and the fact that during 2020, the region eclipsed China at various stages for number of EVs sold. That's seen to be set to continue, as you'll see from this chart, and the anticipated rollout of electric vehicles across Europe. Very, very large jump from now to 2025, and then an enormous jump from 2025 out to 2030. The European Union has stated publicly that they wish to be 80% lithium self-sufficient by 2025. This is not a goal that's likely to be achievable, but it's important because it demonstrates how much support there is for the industry, and indeed for our project directly from the European Union. That support's in the form of financial commitment, but also in the form of legislation, banning of ICE cars at various stages, emission penalties for automakers, and subsidies for the buying of electric vehicles. So a very, very, very strong tailwind in Europe for what we're trying to do. Howard also mentioned how close we are to all of the potential end users in the region. And within this dotted line circle, there are approximately 6 million vehicles made every year. And every year, more and more of those vehicles are being made electric. I mentioned earlier just the highlights of our most recent PFS, worth addressing again. sees us producing battery-grade lithium hydroxide net of our tin credits for just under $3,500 a tonne. That's our first phase 1 operation. And bearing in mind that these numbers were produced using a lithium hydroxide price of $12,000 a tonne. If we were running these numbers today, we'd use a higher number. And also, it was done using $22,500 a tonne for the tin credits. Tin, as you may have seen, has recently touched $30,000 a tonne again, and that makes a very big difference to the economics of the project. This is a very quick snapshot. Very happy for any further questions or to follow up with anyone who's interested, or please visit the website and you can download this presentation in its entirety. Thank you, Howard. Back to you.
Thanks a lot, Keith. And yeah, again, European Metals Holdings, the most advanced, largest project by far in Europe. Europe is suggesting 80% of their raw material supply needs to come, locally, and it's currently at 0. So at 250 million market cap against a 1.1 billion NPV, using conservative $12,000 prices as they advance to definitive feasibility study, and as the lithium shortage continues to appear over the next coming months, as we forecast, the disconnect on a price to NPV, despite the fact that the stock has maybe tripled in the past kind of 6 months. It was coming off a very low base and offers, in our opinion, great potential from here. So with that, we'll now transition to critical elements and Chairman Eric Zaunscherb, and to talk about what we call a new North American lithium triangle is developing. Like everyone talks about the South American lithium triangle, we see a hard rock to hydroxide lithium triangle from North Carolina to Quebec and also Ontario. And if you want, you could even be a quadrilateral if you include Tesla, in Texas, building, a hydroxide facility. So critical elements, I'll leave it to you, Eric, to discuss the great potential and near-term permitting catalyst to hopefully unlock value, not dissimilar to what Lithium America has achieved when they reached their permit status earlier this year.
Well, thank you very much, Howard. First, I wanted to thank actually Mines and Money for having us at this gathering, and then to you for Howard and Rodney for actually having us on this panel. It's much appreciated. I'm originally a geologist, and I worked for 34 years as a mining analyst before joining the board of Critical Elements and becoming the chair in September. It's our aspiration to be a large and responsible supplier of lithium to the flourishing e-mobility and energy storage systems industries. Obviously, the lithium-ion battery is central to them and will likely be so for the next few decades. That lithium demand is accelerating, and that's indisputable, and RK Equity have outlined this case well. Less indisputable is the form that demand is going to take and the ability of the upstream community to meet that demand. We agree with the thesis that all the quality operations providing lithium, whether that's through spodumene concentrate or lithium carbonate or lithium hydroxide, that those products are going to find willing buyers, especially so for those that are capable of consistently producing highest quality lithium from sustainable operations in secure jurisdictions. So I'd like to give you 5 reasons why Critical Elements is an excellent investment vehicle for exposure to that lithium demand growth. First is purity. The Rose Lithium project in AUSG Northern Quebec is one of the highest purity undeveloped lithium projects globally. High purity drives lower capital and lower operating costs, as well as end user appeal. Conservative advancement using conventional processing sees a phase 1 project ramping up in 2023 to produce 50,000 tons of technical grade spodumene concentrate for the glass and ceramics industry and 185,000 tons of chemical grade spodumene concentrate, followed by phase 2 chemical conversion to lithium hydroxide about 2 years later. Second, advantage Quebec. Quebec offers massive competitive advantages, and those include strategically located with access to both US and EU markets. It's a stable jurisdiction with a long history of mineral and chemical production. It's got an educated and productive workforce, excellent infrastructure, including a power grid that's low cost. We're talking about 4.5 cents Canadian per kilowatt hour, and low carbon with 93% from hydroelectricity. And finally, it's a supportive and cooperative formalized relationship that we have with the Indigenous people, the Cree Nation, and that structure includes education, training, and sustainable development already negotiated in an IBA. Third, experienced management. The CEO hails from a multi-generational Quebec family that's intimately familiar with exploration and development in the province. Our president is the former president and CEO of Rockwood Lithium, which was sold to Albemarle to create that lithium giant for $6.2 billion US in 2015. They've been there, they've done that, and they know that a conservative approach is the right approach. 4, optionality preserved. Rather than jump at early offtake agreements with end users, management has been focused on building strategic relationships that are going to benefit stakeholders in the long run. There are few new technical grade spodumene concentrate producers on the horizon, nor are there many producers of highest quality sustainable lithium hydroxide in stable jurisdictions approaching shovel-ready status. Finally, 5, potential catalysts and re-rating opportunities. We've got parallel provincial and federal permitting processes that are nearing conclusion. Regulators have what they need to make recommendations to ministerial level decision makers for final approval. Full permitting may be a critical milestone for strategic investors, conversations that are being had to do the financial engineering leading to final investment decisions. Phase 2 technical studies this year will introduce the economic value of full integration from mine to concentrator to conversion to a market that's only been focused on phase 1 spodumene concentrate production so far. Exploration on critical elements 700 square kilometer land package has now recommenced with the goal to demonstrate that Rose is only the first of several production units that may be advanced. So bottom line, Critical Elements has what is needed to meet the aspiration to be a large responsible supplier of lithium, meet the demands of the modern decarbonization of transport and energy production, and do so on behalf of its investors. I'll leave it there. Howard, thank you.
Thanks a lot, Eric. That's great. And now we have about 10 or 12 minutes for Q&A, which my partner Rodney has prepared some questions. And if there are any, I guess, from the viewers as well, we may ask a few of those. Rodney, why don't you take it away? And Eric, you can stop screen share.
Working on it.
I'll start with Chris, because we'll go in the order that we had. So Chris, with an increased focus on CO2 emissions and sustainability, and companies and EV producers looking to become carbon neutral some as early as 2030, E3 is well placed to integrate into those supply chains. We've seen a household name like Schlumberger getting involved in DLE. Where is E3 placed? How would you feel if there was, would you see there's merit in partnering with a similar name?
Similar to Zaunscherb?
Yeah.
Yeah, I mean, E3 is looking to build quite a big project. I think, partnerships is always one way to assist in the growth of a company, and obviously it accelerates that growth. So it is something that E3 is entertaining and in discussions with. We know the guys at Zaunscherb. We're not in discussions with them, but we do know them quite well. Very happy to see them advance and get this project off the ground. So I'm very excited. But yeah, I think at the end of the day, any small company that you see movements from the oil and gas space. We sit in oil and gas. The top 5 major oil and gas companies in the world have head office, or not head office, but have offices in Calgary. So yeah, I think that it's a very real possibility. But the focus for the company is, clearly on developing this project. That is number 1 goal right now.
Okay, great. Thanks. Keith, on EMH, VW at Power Day indicated a desire to move to manganese-rich cathodes, and they're contemplating a battery plant in the Czech Republic. With yourselves and Euromanganese both in the Czech Republic, that would limit transport distances and reduce supply chain risk for an LNMO-based cathode battery cell. And in addition, we're seeing a potentially and likely introduction of a carbon border adjustment mechanism by as soon as 2023. So time is of the essence for the EU. So my question to you is, how seriously are EU policymakers, and are we likely to see some bold moves in 2021 given these ambitious objectives that have been set?
Yeah, look, it's an interesting question, Rodney. Certainly the people at the level of the EU that we deal with on a weekly basis through that collaborative agreement that I mentioned during my presentation are very, very hands-on, very proactive. It's probably fair to say that at the top level of the EU, things don't move quite as quickly, and that can be a little frustrating. Certainly, it makes a lot of sense from our point of view for Volkswagen to build a battery factory in the Czech Republic. There's even been a report in the newspaper over there that this was being considered via Skoda, who they obviously own, although Skoda is still seen to be the Czech car. It is owned by Volkswagen. And in fact, our partner at the project level, Ches, was also mentioned in the same article as being potentially involved in that. I haven't seen anything formal about that. Certainly it's not a discussion that's involved us, but it makes a lot of sense. The vehicle industry is a very important one in the Czech Republic. It forms a large part of their GDP, and they do make a lot of various Volkswagen marques within the country. I think it is going to require the EU to take the next step, to not just make this seem like a good idea, but to take a bold move, select a project and back it completely in order to get something happening and something moving towards production. I think if they do make that sort of step, or when they do make that sort of step, I think we're happily in a strong position to be a likely early contender for the lithium part of such an equation.
Okay, great. Eric, with Quebec, it's had its moments in lithium in the past few years, but fundamentally, the region remains a strong candidate to supply North American lithium demand, given good relations with the US regarding critical minerals, clean and cheap electricity, and clean, low impurity ore bodies. So as North America transitions into having a substantial EV supply chain, and we are probably more bullish than others on total gigawatt hours deployed, as Howard mentioned earlier, and that would logically bring with it cathode production. Do you feel that Quebec and Canada in general is supportive and ready to step up?
Absolutely. You alluded to the challenges that Quebec has had in the past. That's certainly true. None of that speaks to the natural advantages of having the raw materials there and the cheap power there. Unfortunately, there have been some poor management decisions that have contributed to those things happening. And that's why I emphasize that management at Critical Elements is proceeding conservatively. With regard to Quebec as EV Nord, if you will, as a center of production of cathodes and potentially cells, there are those nice natural advantages to take advantage of: the raw materials in the backyard, the inexpensive and low carbon electricity, and a strong workforce that's well educated, and a long history of production of chemicals and industrial production in general. With regard to production of cathodes, Johnson Matthey is already present producing cathodes for LFP. BAS has a growing presence, if you will, to look at production in Quebec. And so it's a matter of time rather than interest that these things will occur. And as for government support, Quebec government has made a very clear that they have approximately 1.9 billion to allocate towards the sector over the next few years. And more recently, there was an initiative, contributions from both the provincial level and the federal level, on the order of $100 million going into manufacturing of batteries for e-buses. And so there is definitely an interest and support available in the province to move in that direction. Naturally, we want to be part of that going forward.
Yeah, look, Quebec's for all its past considerations, you're having now Galaxy advancing to PA level, investing $20 million for their James Bay project, and you have Livent and Pallinghurst advancing Nemaska. So a lot of the issues were capital structure related in the past. I mean, there was debt on the prior two projects, but with hydro and localized supply, the merits of hard rock, 2 hydroxide, I think in Quebec is very strong. Just want to remind viewers, like all 3 of the companies on this panel are ranging in market cap from like 150 to $250 million, which, if you look at all the money, I didn't speak about it in the outset, but we'll make it a mention. The U.S. capital markets for the EV thematic through special purpose acquisition companies that we track, some $15 billion across 32 companies have gone public in the past 9 months. Following Tesla's excitement, you've had, Fisker, and Lucid, and, QuantumScape, and all of these companies, and all of that is going to spur demand for upstream lithium commodities. But the valuation disconnect, all of those companies have raised $5, $6, $1 billion in some cases. MP Materials, a rare earths company, has a $7 billion market cap, which is not that dissimilar to any one of these projects. So I think there's a valuation disconnect between the upstream raw materials. And another thing I'll mention, RK Equity advises all of these companies and has advised Lithium Americas and Piedmont Lithium in the past on fully listing in the United States. And all of the companies on this panel, we are advising and have expressed some aspiration to more tap into the U.S. capital markets, initially through OTCQX listings or NASDAQ international listings, but also possibly following the full listing. So there's a valuation disconnect that we see just on an absolute basis. The market is inappropriately valuing what are more scarce materials than I think these guys are more scarce than the next SUV wannabe, whether it be Nikola or Fisker. So there's a valuation disconnect, but there's also a capital markets disconnect to the extent that any one of these companies can tap into the U.S. investor, both retail and institutional. That's a catalyst to close this valuation gap. So they're all trading at very significant discounts to their NPV. If you look at their expected EBITDA in 2025, which is how these SPACs are valued, the valuation disconnect, we believe should close over the course of the next kind of number of months, and with the backdrop, we always say, commodity investing 101, lithium, we could dispute is a commodity or not, but commodity equities follow commodity prices. Lithium price has been soaring, up, some 80, 100% in some instances just in the past 3 months. And all the commentary that we're seeing is of much greater demand, against supply. So I think we have maybe, 1 more minute. I'll say lithium I write the Lithium Ion Bull. We have, our rock stock channel. I'd encourage all of you to go to our website or go to our YouTube channel, rock stock channel. But I often put narratives together. So if I could just sum up with all of these narratives, you have in E3, you have Alberta's energy transition to lithium, right? What we call the new lithium standard, right? If you look at standard lithium on DLE, we see the same valuation uplift potential for E3. And European Metals Holdings, it checks all the right boxes, right? And the Czech Republic as a hard rock, in proximity to all of those battery materials company. And Quebec rocking in the free world. Neil Young. We like critical elements as our choice among others, in that area. So with that, I want to thank all the panelists for a great lithium discussion. And we'll move onwards now to nickel, titanium, and graphite. Thanks, guys.
Hey, hi there. Thank you very much. This is just Andrew Thake here from Mines and Money. We're just now having a short 30-second to 1 minute interlude as we go and switch over. So once again, thanks to Howard and RK Equity, and also our three presenters, European Metals Holding, Critical Elements, and E3 Metals, who are now just logging off as we have a quick sort of switch around. We're now going to also stay with RK Equity, but they now be hosting a non-lithium battery metals panel. And we have three great companies lined up, which are Talon Commodities, Talon Metals, and Nouveau, Monde, Graphite. I now think we have all three of our new mining companies online and with us. So to tell you a little bit more about them, I'm going to hand you back to our host, Howard Klein of RK Equity.
Okay, Sean, could you stop sharing your screen for a second? Because I'm going to just share one slide, and then we're going to start with Tazo. Could you hear me, Sean? Okay. Sorry. Forgive me. I just, where is my... Yeah, okay. So you can see all that. So Elon Musk said, mine more nickel. I've added to this kind of graphite, lithium, and titanium. So if you could see, we have Talon Metals here on the panel. We have Nouveau, Monde, Graphite. You're not seeing it?
No.
Okay. That's frustrating. Sorry about that. Anyhow, let's forget for the moment. So we have on this panel, for the first time, Tazo Arima, who is one of the founders of Piedmont Lithium, but he's not going to talk about Piedmont Lithium, but that's the second company that he founded that has reached more than $1 billion market cap, in the past 10 years. So there are few entrepreneurs who can, claim that. So I'm here in Utah, spent some time with Tazo, better understanding this titanium opportunity, which is actually pairing a Tennessee asset with some Department of Energy funded downstream technology, in Utah. So Tazo, I guess he doesn't have any slides, but why don't you just introduce yourself and why is, why are you going to disrupt, the titanium industry, and what are the applications, for EVs and others?
Yeah, great. Thanks, Howard, and thanks for coming around to Utah yesterday. I'm actually in Denver now and talking with a lot of potential strategic partners around critical minerals for what we're doing in Tau. Now, just as a background, Tau came out of the need that we saw and that my team saw in Charlotte for more critical minerals to be developed in the States, not just for battery metals, but for a lot of other applications as well for our growing and high growth future. The modern world is coming. There's a lot of mature industries being disrupted, and that disruption means commodities that have been overlooked need to be built again here in America. So we've secured a very large, as Howard said, we've secured a very large asset, could be one of the largest of its kind, both in America and in the world. It's a very interesting heavy mineral sand deposit, titanium and zircon rich, also with a lot of rare earths in it. So it has a lot of applications to what you guys were talking about today, electric vehicles and on the panel. What I'm really excited about is not just about building these critical minerals here in the US, but also developing our downstream applications for titanium metal manufacturing to reshore it in the United States. And that's where we have teamed with Dr. Zach Fang out of the University of Utah, who was funded by the Department of Energy and had Boeing and Arconic as his industrial partners, where over the period of 2014 to 2019, he developed a way to more cleanly, with zero potential carbon impact and lower cost and lower energy needs, produce titanium metal, which we're now completely import dependent on here in the States. And importantly, it also makes a potential titanium metal powder, which can be used in additive manufacturing. So this has a bit of a disruption across not just the titanium metal space, but other areas we see where high strength, corrosion resistant applications are needed. And currently we're using stainless steel because titanium is the traditional route, is very expensive to make. We hope that it can disrupt the mobility sector as well, because lightweighting goes hand in hand with high energy density in batteries as well. So we see the titanium market, not just for our heavy mineral sands or mineral products, being important in the future of what we're talking about here with battery metals in particular, but disruption around the types of materials we use to lightweight our vehicles and to sort of displace higher carbon intensity materials like stainless steel and aluminum as being extremely important as well. And coupling that with what could be one of the largest assets of its kind in West Tennessee, and creating a wholly US supply chain here and bringing it back to America and actually building it back better, I think is right up the agenda of what a lot of people are talking about in critical mineral space right now. So we're really excited about it. It's Tau Commodities now. We are changing the name to Hyperion Metals over the next 3 weeks through shareholder approval, but we're very excited about what we're doing here in the US as a follow-on to what we've already been able to accomplish in this space.
That's great, Tazo, thanks. And Tau Commodities, ticker symbol TAO, listed only about 4 months ago. You've been incubating this for about a year, and it's they've done an initial capital raise, $3.5 million, I think, a month or so ago, and the valuation of the company is about 80 million today. So very much early days for a very successful and proven resource, North American resource developer. And so all the Minds and Money people who are hearing this the first time, I would strongly encourage you to go to their website and pull down the presentation and follow this story. I think next up now we're going to move to mine more nickel. Oh, by the way, on Tazo, just to going to the theme, the technology in Utah is HAMR, hammer technology, which you could read about. So it's hammer time, MC Hammer. And with Sean Werger, we have here Nickel Nirvana in Minnesota. So why don't you go there, Sean, and discuss your spectacular, upgraded PEA and phenomenal drill results that you've been having with all the money you've raised from recent bought deals.
Will do. And thanks, Howard. And I'm just wondering, are you able to pull up my slides for me? I just have a few that I sent through.
Well, share your screen, or Minds and Money maybe could do that, or you could do that
Minds
yourself.
and Money, last time my computer did a reboot, so I'm hoping Grace will be able to.
Yeah. If you just start talking, Sean, I'll see if I can get your slide up. But if you just start talking, I'll just get those slides up.
No, my pleasure. Thank you very much. So first of all, just to orient everyone, we are a high-grade nickel sulfide project based in the United States, based in Minnesota. Given that we're in Minnesota, we have excellent infrastructure. A couple of notable points: we're about 45 minutes from the port in Duluth, so we have access to all the port installations, can take our product outside of the US to Europe. We also have the BNSF railway that runs directly through the project, so we can also ship concentrates through to Canada. Two things to highlight about the project that I think really make us stand out from every other project that's out there. Oh, thank you for pulling up the slides. So if you just go to the 5th slide, please. The next slide. Yeah, thank you. And so, again, two things that I think really differentiate us. The first thing is the fact that we're in the US. So to give you a sense, by 2026, when we go into production, we will be the only nickel project within the United States. So that is very notable, quite strategic. As everyone knows from the talk today, there's a huge push for a US domestic supply chain, both from a political standpoint as well as from numerous EV manufacturers. So to the extent that anybody goes looking for a US source of nickel, we are the only game in town. I will note that currently 100% of the nickel from the United States gets exported to Canada. It will go to basically the smelters in Sudbury, then ultimately go to Europe, China, and if it makes its way back to the United States, it's in the form of an already made battery within the electric vehicle at that stage. The other thing that really differentiates us is our partner, Rio Tinto. So one of the largest mining companies in the world. Excellent partner to have. We are the operator of the project. We are in control of the project. We make all of the operational decisions, but we have the benefit of having a number of Rio Tinto personnel that have joined our team. We have access to their departments, and we have quarterly meetings with them where we decide on operational strategy. So it really is great that we get to leverage off of a major. I like to say that we're as nimble as a junior, but we get to be as robust as a major mining company. Can you please flip to the next slide? Just to give everyone a sense of the size of the project today, as you can see, we have 3.9 million tons in indicated, another additional 7 million tons inferred. A really high grade project, just over 2% nickel equivalent, which is nickel with your copper. That just basically means that we will be a low cost producer. What you see on the right on the far right is our sliver, which represents the resource. So although we have a sizable deposit at the moment, it really only represents a small portion of our huge complex. What's really exciting about the project to many is the exploration upside. We have drilled 3 kilometers to the north of our resource area, hit the highest grades on the project to date, over 9% nickel. We've even gone 1.5 kilometers south and hit high grade nickel copper mineralization too. And on the left there, you just see a comparison to Talon, which is in Russia, one of the largest, most prolific nickel producers to date. And as you can see, the red really represents that they have numerous mines along their complex, and we think we're at the beginning of a future nickel camp. Next slide, please. So just a quick comment on our strategy. Look, what's great about the project is the huge optionality. We can produce for either stainless steel or the electric vehicle market. What you see on the far right is the traditional stainless steel approach where, as I said, we would export like all other nickel projects to Canada and ultimately sell our concentrates to the smelter. The alternative is, and we think this is much more of an environmentally friendly way to do it, is to have a US domestic supply chain where we produce either a nickel sulfate or a refined nickel powder for batteries, for electric cars within the United States, which ultimately, as you see, has a much smaller footprint. So that is the preferred strategy at this point, but we do have the optionality to go any which way. Next slide, please. And as Howard touched on at the beginning, we just came out with an economic assessment of our project. So just to give everyone a snapshot of where we sit, as you can see, the NPV of the project is significant, north of 500 million US dollars. IRR, any which scenario you go, is extremely strong, going up to an after-tax IRR of 48%. And what's really attractive about the project is it's low CapEx, no matter which way we go. So very attractive from a financial standpoint. Next slide, please. And then I just want to make one brief comment about green nickel, which is obviously very important. Look, From our perspective, green nickel is nickel produced in an environmentally friendly and socially responsible way. We look at it from mine all the way to the final battery. We think that it all needs to be done in an environmentally friendly way. What you're looking at on this slide is numerous initiatives that we have going on to ensure that we have green nickel. And as you can see, one of those at the moment is working with University of British Columbia towards carbon capture and storage. We believe that we can have a project that is carbon neutral or potentially even carbon negative. And then finally, next slide, just in terms of for investors and people looking at the company, where we're going. We just completed a capital raise last week. We've got a really strong treasury of over $40 million Canadian. So just a huge amount of drilling going on this year, 25,000 to 30,000 meters, with the goal of getting the project into production by 2026. So it's going to be very active. And then one corporate thing I want to mention is that we have a goal of getting on the NASDAQ later this year. We are a US asset, again, the only nickel project in the United States going forward. And we think that proper home for us would be in the United States, which is why we're looking to do a secondary listing there as well. Thank you very much.
Great. Thanks, Sean. That's awesome. The grade of your project, I think, is what 2% nickel equivalent is vastly higher than many of the other projects. I do keep track of a nickel scoreboard, and Talon has done, I guess they did a financing recently at 60 cents, which followed a financing they did at 30 cents. Just a few months ago, which followed, 24 cents. So Talon's risen to the top of all of my nickel developer scoreboard, in part because people are appreciating all the things that you've just talked about, but still a lot of resource expansion through the drilling, to go and upside to NBV, and Rodney has some interesting questions about some of the, other iron and things, I think. So, but let's switch now to a new world of graphite naturally, right, is my phraseology. I haven't figured out the right song yet for Nouveau Monde, but in a world of synthetic graphite, hydro, cleaner, cheaper, Nouveau Monde has also risen to the top of the graphite scoreboard. And Nouveau Monde also has announced some plans as well to look into, proper US listings. So take it away, Eric, and tell us about Nouveau Monde.
Thanks, Howard. Hopefully it will be a French song. You will build with that, but I'm looking forward to hear it next panel. Great. So Nouveau Monde Graphite Company, I've started 2012, actually went all the way from grassroots exploration, developing this vision of building the largest graphite operation in the Western world to serve the lithium-ion growth. So I have a few slides for you. I'll be making forward-looking statements. The slide, from benchmark minerals. So there's a lot of minerals that will be needed to go in a battery. Now, I think in March, we are monitoring 199 battery plant over a gigawatt hour. Obviously, it's all the minerals going in the battery will have a big bump. What it represents for graphite, it is a big growth, like a major growth going to 2030. So that's exactly what we want to be. We want to be the first to market. We're developing the largest graphite operation in the Western world, but also the most advanced, to be in full-scale production, both at our mine site and our value-added operations before 2025. So the growth that is there, we want to capture the most we can out of it. So from all those commodities, we see a lot, including last week, actually, Volkswagen announcement around diversification of the procurement strategy. So they start to realize that we will lack some nickel, lack some cobalt. So let's diversify the cathode material and have some cheap LFP to help us achieving the quantities. But in reality, on the anode side, it's still over 95% of graphite. Artificial, natural, half and half today. Benchmark forecast 2/3, 1/3 for natural in the future because of the challenge of the supply of needle coke doing the artificial. But it is still a very large number going forward, and we want to serve we want to take the most market share out of this. And graphite will be needed in massive amount. So what we're developing at Nouveau Monde Graphite, it's a full vertical integration from the vineyards in Saint-Michel-des-Saints, the mine and concentrator 2 hours north of Montreal, to the expensive wine manufacturer. So that's where we do the anode material in Bécancour between Montreal and Quebec City, in one of the largest industrial park in North America, actually based in Bécancour. Great infrastructure there, we'll talk about it. And why we do that? Graphite is 100% controlled by the Chinese today, going in the lithium-ion batteries. We want to be the best alternative, developing a carbon-neutral product. So we use exclusively hydroelectricity. Even our open pit mine will be all electric, using all electric equipment. And we want to offer our customer carbon-neutral product, fully traceable in a safe jurisdiction like Canada. We're the best neighbor to the US that you can have. And at a low cost projection, because our hydroelectricity is not only green, it's also very affordable at 4 cents Canadian per kilowatt hour in pretty much unlimited quantity at our scale. So that's what we're developing. So, and what it represents, going from the Matawini project, from the ground up to the Bécancour transformation, making an integrated anode material producer. So we have a feasibility study made in 2018 on the Matawini project. It is fully permitted, and we're starting construction as we speak to be in full-scale operation by 2029 ends. And on Bécancour, we have already purchased the land, and we have announced a few weeks ago the economics of that Bécancour project. So if we combine the economics of both projects, the full integration will represent in 2025 270 million of EBITDA potential US. So that's what we're working on, developing a large-scale operation that is meaningful for the customer, from which we can expand and grow. Both Matawini mine and Bécancour land can expand. We have room for expansion to follow the growth of our customer. So that's really what we're working on, a full integration. So if we go in Bécancour, you may, if you see the St. Lawrence River just north, there's a deep sea port there, should we receive flake graphite from anywhere in the world. We're currently building a phase 1 that will be fully commissioned mid this summer in an all-in facility. All-in is the largest chlor-alkali producer in the world. They have a plant in this industrial park, and we are building our first capacity, very significant, 1,500 tons per year capacity, will be built and commissioned mid this summer. And across the street from All-in, to take advantage of the proximity for chemical supply, but also an hour and a half from our mine site for the raw material supply, and unlimited amount of electricity at that location. So the 3 biggest costs are optimized, we make sure that we have the lowest cost possible in this industrial park, and it will be built across the street. So what you see there, the sketch, is the 45,000 ton of finished product plant that we announced a few weeks ago, and we have kept a room for expansion. It is a modular process, so it is easy to expand when the market is growing. And you see across the street here, it's one of the largest aluminum plant in North America, ABI. So it sounds small, but it's 750 meter long, like this land. It's quite a big land that we have there. So that's for the VAP, value-added project. 2 hours north of Montreal, that's where we are developing our mine site since the discovery in 2015. We are operating a demonstration plant where we've produced few thousand ton already since 2018. We have qualified our flakes with a lot of other markets, and we have trained our people. We are operating that plant, and based on the success of that demonstration phase 1 plant, we are currently building the phase 2, as you see there, right beside our 2.7 kilometer long deposit. And that's where we are planning to process 100,000 tons of flake concentrate during 26-year mine life. But we have a resource that could potentially double that capacity or double the mine life if we decide to do it with, as I said, partnership with our customer. So it's a 10 second. Hopefully you'll be able to see it without a lag, just to show you the infrastructure we have. So the deposit is all on Crown lands. It's fully permitted. We're starting construction, but we're close to a community, Saint-Michel-des-Saints, taking advantage of all infrastructure and the labor force, skilled people, and logistic also to be very close to the, the big hub of Montreal. So in short, we are developing a material that is in big need. The graphite won't disappear. We need graphite to make those batteries for the next decade and more. We are the Western world most advanced and largest project, and we're developing carbon neutrality to be a good alternative to the Chinese supply in a tier 1 jurisdiction. We have de-risked our operation with demonstration plan to make sure that we can qualify and advance our product, but also de-risk our process and base our engineering on a known process. And we have a very interesting projection with 270 million US of projected EBITDA, mainly going in the anode material. And we have room to expand. So that's pretty much what we do. We have shortly on the capital structure, we're just north of 500 million US dollar market cap. We have about 35 million Canadian in the bank now. And we are supported by best shareholders you can have, like the Palingers Group. They are close to 20% shareholding of the company, with the Quebec government as a second shareholder, and big Quebec institutions like the Caisse de dépôt, FTQ, and long-term vision to develop the project. That's pretty much who we are in a nutshell, Howard.
Okay, thank you, Eric. And you did announce, in addition to all those shareholders, examination of a possible U.S. listing. So hopefully you have a very active and liquid OTC listed company at present, but should you go full listing like Piedmont and Lithium Americas have, it'll open up the door potentially to a much larger universe of U.S. investors who have pushed MP Materials and other stocks to these SPAC-like valuations. So Rodney will follow from here with questions for each of the companies.
Thanks, Howard. Taza, I'll start with you. On Tau, if we look at how much the US imports of its titanium needs, literally all, and there are a lot of great things happening in the sector, particular 3D printing and the potential of reduced waste in terms of using 3D printing. And given its unique properties of strength and lightweight, I don't think people really understand fully how big the opportunity is. Can you talk a little bit about the future potential market size, using titanium in 3D printing and other applications? You're on mute.
You're on mute, Tazo.
Sorry about that. Yeah, it's a really great question, Rodney. It's sort of a bit tough to answer because you've got stainless steel components still being used in mobility sectors. You've got certain aluminum components which don't have the same sort of strength or corrosion resistance being used in other components within the mobility sector as well. And that's before you start looking at the biomedical applications and the aerospace and space applications, where there's a lot of disruption that could happen. Like you sort of pointed out, when you combine, if you can bring down the cost of the titanium metal powders, spherical titanium metal powders, which now are above $200, $300 a kilo compared to, say, stainless steel or aluminum powders, which are $50 to $100 a kilo. If you can bring that cost down whilst we proliferate the use of additive manufacturing, 3D printing, for a lot of what we're doing here in the US and in Europe, you bring those two together, and all of a sudden there's a moment where end users and the 3D print manufacturers themselves need to look at it and go, do we actually use a better product for the same cost and for the same end part cost, or do we stay with a higher weight or less corrosion resistance aluminum or stainless steel component, which doesn't give us the same benefits? You overlay on top of that, especially in the stainless steel market, that in the mobility sector you need light weighting. That's a big, easy way to add range to an electric vehicle. we think there's immense opportunity in the electric vehicle sector for bringing more titanium parts into springs, main.
You froze there, Tazo. All right, Rodney, why don't you move on to the next question?
He's back.
Oh, Tazo, you're back. I'm sorry, you froze there for a few seconds.
Did I? Okay, can you hear me now? Sorry, I'm in really bad reception. Yeah,
you're good
so
now.
There's so like I was saying, in the mobility sector, that's the big part where we can replace a lot of those components, or the stainless steel or aluminum components with a better product. So for us, what we see with titanium metal, it's not just about reshoring the supply base here in the States, which is a massive market. It's the largest titanium market in the world, end-use market in the world, because of the aerospace, defense, and space sector. But it's also about potentially disrupting these huge other markets, which are currently reliant on heavier, less performing metals than what titanium is, and they are very, very large markets as well. So I don't know where it could go in the next 5-10 years. Could we, double, triple, quadruple the amount of titanium used? I think so. Could it go even higher? Potentially. And when you're talking about a market which is already in the US of $4 or $5 billion a year just in the US, those are immense markets which we could control with the technology that we're developing. In addition to that, we've got the mineral business, which is very, very strong as well.
So that hammer technology, that it still needs to be proven, but it has been proven over 8 years with this DOE funding, which I witnessed the other day on Monday, visited the pilot plant. Over the next few years, you're going from advanced piloting to hopefully commercialization of that technology, which is more environmentally friendly, but very importantly, lowers the cost potentially. This is very disruptive technology, this hammer technology, compared to the steps that are currently used to produce titanium metal powders. Is that fair, Tazo? Tazo's frozen. Okay. Okay, let's move on to Sean.
Halfway doesn't.
Tazo, we're going to move on to nickel and graphite questions, but thanks for that. And visit Tazo's Tau Commodities website.
Okay, great. Sean with Talon, congrats on the recent drill results. Exceptional. It's rare to see in a world of low-grade deposits to see such high-grade drill results. The latest PEA identified 3 process routes, each with their own benefits. Nickel powder would be a deviation from the traditional sulfate route. It looks to me that there are some clear cost and certainly carbon footprint benefits, especially with what's being discussed in the industry around nickel pig iron to matte. Your thoughts on these?
Yeah, so I guess, my general comment on the refined nickel powder approach, this is something that Tesla talked about last year at their battery day. And so most of the market right now, when it comes to batteries, they're producing a nickel sulfate, but Tesla is kind of deviating from that and talking about going to a refined nickel powder, which is really just a more pure form of nickel, which ultimately would lead to even further range in the vehicles. As you touched on, there was a bit of a announcement in the industry a couple of weeks ago, where it was announced that China was basically able to take nickel pig iron, which is essentially dirty nickel from Indonesia and the Philippines, and convert it into a product that ultimately can be used for battery metals. Look, it's not, my personal view is that there's been a bit of an overreaction to the news. It's not something completely out of the realm of possibilities that you can take any nickel and with numerous steps ultimately convert it into a product that's applicable to batteries. The question is, at what cost? And of course, what has not been disclosed to the market is what the cost was. So look, we believe that, coming back to Tamarack, We're a low-cost producer, so it really doesn't matter what the nickel price is. Obviously, the higher it goes, the more beneficial to the project, but we work in any nickel environment. And as you said, there are a number of advantages, potential advantages to going to a refined nickel powder. The last thing I want to mention about refined nickel powder is that we're also doing a study now, early days, to see whether we can also get from our product what's called a refined iron powder as well. So within our nickel concentrates, interestingly, we have 4 times the amount of iron than we do nickel. And so if we are able to extract the iron as well, we might be able to produce a product that's not only applicable to nickel batteries, but also iron batteries, the LFP batteries. And that's something that's currently not contemplated in our economics as at all. And if successful, could have just a huge impact on the overall economics of the project. But as I said, it's early days, and we'll have the results of those studies over the next 4 to 6 months.
Fantastic. And to you, Eric, great things happening. You recently announced that you've secured a phase 2 200,000 square meter site in Bécancour, adjacent to the phase 1 site inside Olin Corp's facilities, which would make you Nouveau Monde, the largest ex-China high-quality anode materials producer. My question to you is, and we think it has great value, but how unique and supportive and important are Olin as partners to you?
Yeah, so Olin, actually, it's a win-win situation. We own 100% of the IP. They have expertise like no one else in managing chlorine and managing caustic soda and managing the different chlorides that we will produce as a reject and impurities in our process. So they are really a win-win partner. And their win is to sell us a lot of tons of chlorine across the street with a pipeline and a captive customer. Obviously, that's a big win for them. And so, I mean, it's not a process that you can develop anywhere, like in your garage or at the mine site. It would be difficult. So trucking chlorine is a challenge. But when you can managing it on site with a pipeline or with using Olin expertise, you reduce a lot of the hurdles to work with experts like that. So it's really a win-win situation where they see their win, we see their win, and they want to develop a new market segment for their product, chlorine and caustic soda. And it's just a perfect fit for us.
Great, thanks very much. Howard, do you want to, I think you probably wrap up.
Yeah, we have just a couple of minutes to wrap up. Yeah, look, again, RK Equity, Rodney and I are focused pretty much exclusively on opportunities, North American and European supply for North American and European demand. Like it or not, we live in a competitive world, and supply dynamics and geopolitics come into play. The Americans and Chinese met for the first time in Alaska. I don't know if anyone saw the commentary after that, but anyone thinking that there would be a thaw in this discourse, under the Biden administration, it's starting off on a foot where supply chain issues, really matter greatly, and environmentally friendly is important. Short distances, so all of the companies presented, all 6 on these 2 panels, high quality deposits, high quality management teams that are able to raise capital and front face with the capital markets, all have aspirations to tap into the broader universe of US investors who are very interested in playing this thematic. And again, I come back to it, there's still a huge disconnect from a valuation perspective. I think Nouveau Monde articulated a 270 million EBITDA by 2025. That's how all of these EVs, special purpose acquisition companies, are zero revenue, forecasting, $250, $300 million, of EBITDA several years into the future, but are trading at 4 or 5 times, the valuation, $1 billion, $2 billion, QuantumScape, I don't know, $20, $30 billion. So these are scarce, graphite and nickel, lithium, titanium, people could argue, on the scarcity value. Oil's not scarce necessarily, right? But you've made a lot of money in the oil industry over the years because the demand for those materials are super duper high. That's the same for all of these metals. And again, North America, a premium, a green premium we've talked about, is coming into the vernacular, and policymakers are recognizing it. Last thing I'll say is that apart from the China and U.S. discourse, the first phone call with a leader that Biden had was with Trudeau. The Department of Energy, Jennifer Granholm, we've been talking a lot about her. She was born in Canada, and one of the first things she did was talk to her counterpart in Canada. So you're going to see a U.S.-Canada, broader relationship, I think, on minerals. A lot of these companies are Canadian listed. Some cases they're Canadian assets. In Talon's case, it's a U.S. asset, and likewise that applies to Australia, and U.S. connectivity, and as well for Europe. So I'd encourage, thanks again, Minds and Money, for partnering with RK Equity. It's been a fruitful, relationship to help showcase on the battery materials side some of the best opportunities, and hope that all of Minds and Money viewers and attendees to their conferences, pay attention and meet one-on-one with all of these companies. And if anyone has questions about any of them, feel free to reach out to Rodney and me. We're on LinkedIn, Twitter, or through our website, rkequity.com. Thanks again, Minds and Money. Andy, if you want to just conclude with any comments.
Yeah, sure. That's just a final thank you from me, Andrew Fake at Minds and Money. I think it's been 2 fantastic panels. We'll certainly encourage our viewers to go and check out all 6 mining companies that were presented today, and also to go and check out the RK Equity website as well. Many, many thanks.
Thank you.
Thanks, everyone.